about his forecast for the Cybertruck. Here's what he said.
We're aiming to make about 200,000 a year at volume production. Maybe a little more. But I just can't emphasize enough that manufacturing is much, much harder than initial design.
So you had another forecast on this.
There's a wow from a man who is obviously uber excited. However, I was looking for 250,000 because remember on Wall Street we have what?
You had a Cybertruck number?
Yeah, because you see, I follow the F-150 really closely because it's been horrible.
Oh, okay, so you wouldn't have given him a wow.
No, I would give him that.
Good morning, good morning, everyone.
Yeah.
Okay, just making sure.
Well, it's like it's not a Twitter, it X.
Would you have taken Elon out back to shoot arrows at the Cybertruck if you had him on?
No, and I just question whether it isn't. Is it really a truck? It's the people who buy this stuff are they're like collectors. You know what this looks like to me? The DeLorean.
It does have that kind of feel to it.
Does it? The DeLorean
He has said many times how difficult it has been to actually manufacture at scale this truck.
Right.
Given the design specifications. He said that. I mean, it's an entirely new process apparently, and it has taken a lot longer than they'd anticipated, or at least than Musk had originally promised.
Well, I mean, look, the F-150 is the best-selling vehicle. This is not going to compete against the F-150.
What is it going to compete against?
I think it's a whole new category, which I have to give credit for. I mean, this is the beginning. We have cars.
Good morning, good morning. What's going on, everyone?
It's not bad to come in and have something new. We haven't had anything new in cars and trucks since what? Since, I don't know, the Super Duty. It's very exciting. It's just that, there are people on Wall Street who are looking for 250,000. And I just think that what matters is that he's got something novel, and I think there'll be people who want to have novel. There's people who want Rivian. There's people who want Fisker.
You think it's in the Rivian school?
Yeah, I do. I do. I think that it is going to be something that people say,
Wow. Yes.
Not a truck, something new. I want it. So therefore,
Savage.
Just please do not.
Damn, what a miss. What a miss. What a miss. Starts my feelings. Sorry, you're looking. I'm actually looking for a long. So the gap down that we did last week has been filled. I do think that this could continue going higher. So I'm going to be looking for a pullback to go long. So looking at yesterday, yesterday we had this range right here. We couldn't quite break below. We got above. We pulled back, little pullback slightly, and then we've reclaimed the 41.99, and we've had higher. So I'm going to be looking for a pullback to go long. I'm going to start off with the micro. Take a look at natural gas still dropping. CL ain't looking too bad. We are doing pretty big pivot support. Yep. So let's see what happens. Might be getting on a dual stream this morning with Mr. Deck. In fact, let me click on it right now.
But that's what I'm going to be looking for. Calls from right after 2 o'clock, maybe right before Jerome Powell starts speaking, and then seeing if the market can really again go on a very big rip and run and spike and climb. That's going to be absolutely crucial, absolutely important, and make sure that you guys are all good. Now, on top of that, traders, as we've already again talked about this a little bit, we've gone over this here and there. This is, still a very, very big, important thing that I want every single trader to be aware of. And let me see if I can just find this right here. And this is just a quick little clip. Remember, guys, I showed this to you guys yesterday, called the lag effect. And what is the lag effect, as we already talked about? The lag effect is where we can say to ourselves, hey, the market has not fallen yet because we have not truly paused and finished rates. So let me actually just grab this, and because I want to give you guys the short little version. And the lag effect shows that every single time that we have raised rates, it has always taken about 10 months before we have gotten that very nice drop. So let me actually show you exactly what I mean. I don't know if you guys can hear this over on Discord, but if you guys do not hear this on Discord, please again, go check out this video right here. Oh man, I accidentally just exit on out. And just skip on over towards the last little bit, and it's just really good information. So this is the only reason why maybe traders are going to start getting a little nervous, start getting a little bit scared. And I know some of you guys have probably already seen this because I posted this over in the chat room. But if you guys have not yet, let me go ahead and post this right here so that we're all set, ready to go. All right, so everyone tune in, listen to this right now.
KFC. The Taco Bell was on fire. David, I would suggest the breakfast taco. You won't believe it, especially after a hard night out, which I know you don't have. Pizza Hut did not do it. So you have two growth engines, KFC and Taco Bell. Pizza Hut, what matters here is the numbers. The same for chefs very good, but it was made through traffic, not just price increase. So this stock can go down, you can sell it, you can say it's not there, remember young China, and just watch it go down. Or you can say, all right, this company actually did better, and I'm going to start thinking that maybe it's not the buy. And this is the big dilemma. This doesn't look good. I know the chart looks good. The chart's bad. The chart looks bad. Don't forget Nvidia and but anyway, I'm just saying that this is the level of the market. Why focus on the one division that's still being 7%? Why not focus on KFC and Taco Bell? The answer is because that's not this better. Not focusing on anything that's good. Only focus on pizza. And I think that answers it. Hey, well, it's not that point. It's just, oh man, that's just all about what I'm about. It's not you. It's because it is noticing here.
All right, traders. So that's kind of just what I wanted to go over real quickly and making sure that you guys are all set. So there is still that recession chance, that recession talk. I mean, those are pretty big factual facts right there. You know what I mean? So let's see what's going to happen. That's something that's still down the line in the future, but we will see what's going to be happening with today. What I honestly think is going to be happening with today, guys, is we are going to see either quick pop, quick drop at the bell. If you guys do want to trade this morning, which I'm against, but if you guys want to trade this morning, do the opposite of what you see at around 10 o'clock, and then let it ride back up to the open or fall back down to the open. Then take your profits. Then the time you want to trade is 2 o'clock. 2 o'clock, we all are leaning towards calls. Watch for, again, the market's go on a quick little pop, or wait until Jerome Powell to start speaking and then go ahead and get it on calls for a quick little pop. I don't expect that we will see a dump today. The only chance that we have a dump would be if the Federal Reserve ever stated, hey, we're going to raise rates. If we ever said we are raising rates, I think the market would fall all the way down towards like sub 410 today. I think if we ever raise rates, we would go on a $10 to $15 drop today. Like that, we have so much room to fall. If they say, hey, we are going to keep rates the same, I think a great target would probably be like that 13 EMA, which would be up towards around like 421. So I'm thinking, we're going to get up towards around like 421, 422 today. I don't think there's going to be a massive move to the upside, to be honest. I think we'll probably get maybe $2 to $3 spiking after Jerome Powell speaks. So I'm thinking maybe $2-3 spike after Jerome Powell speaks. Not really anything too crazy, but I'm expecting at this point, if the SPY spikes up a little bit, watch for it to fade back on down. Now, also, if you're saying, Deck, well, what about penny stocks? Penny stocks is what we can trade today. The number one top gainer is CLLS. I'm not a huge fan of the low volume on CLLS, but what I will say is CLLS does have some very strong resistance at the price of $3. So the thing is, notice we have bounce play at $3, bounce play at $3, old high at $3. There is a chance that this just gets a very quick little pop right on up. Everyone takes profits at $3, and then you get a nice pullback. Then you get a nice drop. Then you get a nice fade right at $3. Break of $3 might get some rallying all the way up to $4. But I think most people are going to do short entries, and most people are going to take profits right at $3. So make sure that you guys are aware over on CLLS. PATI got acquired. MNPR, not too much in the penny stock world recently. Do you guys feel that? Do you guys feel like the penny stock world's been a little bit quiet recently? And maybe it's just because there's been so much going on in the market. The bonds market is as high as it was since 2007. We're seeing the Federal Reserve speaking today. We're seeing this, we're seeing that. It's like, I just feel like a lot of, penny stock companies are like, man, there's so much going on. People aren't, as focused. A lot more people are focused on the overall economy because they're scared of what's going to be happening. So I just feel like we haven't seen a lot of hype. We haven't seen a lot of news. We haven't seen a lot of attention in the penny stock world. And, usually penny stocks go crazy when things are more calm. When the SPY is calm, penny stocks go crazy. Because it's like, oh, who cares about the SPY? It's being born right now. The SPY is far from boring. The SPY at this moment is being, far from boring. It's scary. It's exciting. It's, people are cautious. We don't know what's going to happen. So, penny stocks have just been a little bit slow on the back burner just because everyone has been focused a little bit more over on blue chips instead. So that has been something that we want to continue to keep our eyes peeled on, and of course going from there. So ladies and gentlemen, we are going to also be having some live streamers join us today on this day. We're having Buddy Trades join us today. We're going to be having Caesar join us today, and we're going to be getting some feedback from some other top traders here over on Tradecaster on what they're thinking is going to happen on this day. What's their idea? What are they looking at over on this day? So, guys, the market's about to open on up right now in about a few seconds. We'll see what the S&P 500 does. And then, of course, we're going to hear from Buddy Trades. We're going to hear from Caesar. We'll hear from myself on what we really think is going to happen at 2 o'clock. Then we're going to wrap up the morning commentary. You guys are going to get a little bit of a break. And then the real commentary is going to be from 1:45 today all the way up till around 4 o'clock. So for anyone that's just joining us at this time, we are going to have a little bit of morning commentary here today. But please try to clear your schedule out for this afternoon. This afternoon is when we are going to be getting after it. This afternoon is when we are going to be trading. This afternoon is when we will be seeing the action. So today, the main trading points today are going to be from 1:45 up to 4 o'clock. If you guys are on the West Coast, that's going to be from 10:45 all the way up towards around 1 o'clock. So that's going to be the time that you kind of want to block out in your schedule for you guys to really be here on this day. But other than that, Discord, I love you guys, but get on over here to tradecaster.com if you guys want to watch me live trade today and hear more of the game plan on the day. We love you. Get on over here to tradecaster.com.
Hey, what's up, Sean?
So, team, awesome job, awesome work, and fired up to be here with you guys and really seeing what's going to be coming on up on this day. Let me also, again, I saw Buddy just joined us. Let me get Caesar as well so that we're all set. Caesar, do you have your webcam on by chance? Because I know it says 3 participants, but
my cam is on, but I'm currently streaming.
Starting to fade a little bit, but dropping back on down here at this moment. Let me again bring over the Zoom right here, and we'll start hearing some of their thoughts as well. So let me bring this thing on over, and we are. I see Buddy. What's up, bud?
Yo, can you hear me?
Can you hear me?
I hear you.
Sean, can you hear me?
What is going on? What is up, guys?
What is up? Hold on 1 second. Caesar, are you trying to get your webcam up or not?
So my webcam is I'm currently streaming, so it's on, it's connected to OBS.
Okay, I gotcha. So if you guys want to actually see Caesar, very simple, very easy. All you guys have to do is go over to his lobby. So he's over here in his lobby. So you guys can click his lobby and actually just scroll right here, and then you'll be able to see him right above me over on this side right here. So if you guys want to see Caesar, he is just live over in his lobby. So you guys can go ahead and check that on out if you guys want to. But starting on off at this time, I mean, since we got Yeah Buddy and Caesar right here, we'll just start with Yeah Buddy trades. What do you think is going to be happening on today? What's your thought process? How do you think traders could be able to win? Just kind of give us your full thoughts of today, 2 p.m. Jerome Powell, Federal Reserve. What's happening? What are your thought process here?
Bada bing, bada boom. All right, so yeah, what's up, guys? So my honest opinion, my honest thoughts in general is gonna have to be that unless you're trading, it's going to have to be a penny stock, which we all know penny stocks aren't really going crazy right now. Nothing ripping, nothing running, nothing really happening. So unless some random penny stock comes out of nowhere, I'm sure AK will be all over it. He'll be alerting it. But yeah, other than that, I mean, there's no reason to touch it. So guys, my honest thoughts is everyone here, whether you trade futures, whether you trade blue chips, whether you just solely trade the S&P, bro, you just sit on your hands. Not only sit on your hands, but if you don't sit on your hands, all right, me, Deck, and Caesar are all going to end up in your kitchen. Not only end up in your kitchen, all right, Caesar's going to be cooking while me and Deck are sitting there eating a bowl of just bad ice cream, bro. And not only ice cream, bro, you're going to come in think you're going to eat with us, but it's going to be vegetables. So, with that being said,
Sounds like a threat. Getting a little into it here. Okay.
yeah. But yeah.
So what do you think is going to happen when Jerome Powell speaks at 2 o'clock? Market going up, market going down.
Yeah, so definitely.
Do you have a game plan all set already?
Yeah. So definitely, what is it? Definitely just, it depends on what like you said, I mean, it really depends. I don't think we're going to be raising interest rate hikes. I really think they're going to pause them just because we're kind of at that state. There's a lot going on in the world right now. There's a lot of tension everywhere. I feel like if you continue to raise these interest rates, I don't know. My personal thoughts is we're probably not going to raise them. So I think we might see a slight pop in the market, maybe up to 420, maybe 420.50. Nothing crazy. But if we do end up raising interest rate hikes, yeah, man, I will be definitely playing the downside. So playing the upside, if we don't raise interest rate hikes, we end up just pausing them. But if we end up raising them, I will play the downside, 100%.
Awesome. Yeah, that's my thoughts as well. I mean, I think there's a lot more room to the downside, but I just don't think we will be raising rates to the downside. But I know a lot of times, we get a kind of opposite views when I talk over towards Caesar. So Caesar, what are you thinking today, bud? Because you always again kind of come in with, I feel like a different opinion and a different view. And I'm not saying that's an incorrect view. I like hearing your thoughts. I like hearing what you're thinking. So, what can you bring to the table here today?
Well, I mean, so far as when it comes to the Feds and the rates and how they're going to continue or not, I've been pretty on point. I mean, so far I'm batting, was it 3 for 3? So today, my perception today is that they are going to raise rates. They're not gonna pause. I believe they left things unchanged the previous meeting. So today I'm expecting that they're going to raise rates, which is going to cause the market to do a slight pullback. We may potentially retest. I want to say this is like last week's low or this week's low. What was it? This week? What was they? Yeah. No, last week. So it's gonna retest last week's lows. So that's my perception on that. As I've stated before, I do not see the Feds cutting or doing consecutive pauses until mid 2024. So with that being said, today I see them raising rates, which is going to cause the market to do a pullback. Right now, seeing the type of action that we're having, where the market has popped so far before the 9:30 open. There is a void on the future side on ES, which is the S&P 500 SPY, to the downside at about 41.36, which for the SPY, it would be a drop of the SPY down to about 410. So that's what I'm looking at for today. And again, it's just my personal view. And again, I could be wrong, but so far I've been pretty on point as far as the Feds to continue raising rates until 2024, and then start cutting it closer to the mid to end of 2024.
Yeah, no, I mean, I'll say this, like, that's the thing. Like, we've talked to Caesar before about, what he thinks is going to happen. And, he was saying that we were going to be raising rates all the way up to the fall. And I remember him saying that back in the spring. And I was like, I don't think so. I mean, that's just, and then, they're still doing it. They have been. So he has been correct on this. The thing is, I feel like a lot of us, we do get used to just basically saying and trusting CNBC. Whatever CNBC says, that's what we believe. CNBC today says that there's a 99% chance that we do not raise rates. So we just all assume, okay, there's no chance. But again, Jerome Powell can come out and he can say what he wants. And when he says what he wants, that's going to be the actual fact here. So I do want you guys to realize we don't want to just put all of our trust in saying, okay, I'm going to buy, I'm going to invest, I'm going to put all my money just because an article on CNBC says that what we should be doing. Really, the best thing to do is, of course, wait to see what's going to happen. And as we have noticed before, the Federal Reserve has lied to us. Not once, not twice, many times. You guys have heard, again, the story that I've told you guys many times. Back in 2020 or 2021, when the market was going absolutely nuts, Jerome Powell initially stated that we were going to have to raise interest rates twice in 2022. Then it went all the way to 7. Then it went all the way up to 10. Then he was like, oh, don't worry, 2 times 0.25. Then we went to 0.5. Then we went to 0.75. Then he said, okay, no more. Then another 0.2. Okay, no more. Then 0.25. Then, hey, guys, we're going to be cutting rates, pausing rates. Never pause rates. Then we're going to be cutting rates 4 times in 2024. No, guys, sorry. Now it's only 2 times in 2024. And I'll be honest, I don't think we're going to cut rates at all in 2024. I don't think we start cutting rates until probably the first rate of 2025. That's what I think. I think we keep them high. If we pause here today, I think we don't cut rates all the way until the start of 2025. That's where I'm at.
I like that. I like that. So just to add on to that is again, like, there's obviously, like, everyone sees this whole issues happening in the Middle East and so forth. So there's a lot of tension going around, and I still want people to remember the fact that a lot of countries are de-dollarizing their reserves, and as such, that is more dollars going into the market, into circulation, which is why I've been consistently bullish on the fact that the Feds are going to continue to raise rates because they really need to combat that inflation. And the previous CPI was healthy, where people are still spending money. And what they need to do is they need to desensitize people from wanting to spend money, right, to be able to lower inflation. So the previous CPI numbers were positive, to where the Feds are going to continue raising rates. So, and that came out before they did this meeting. So that is another reason why I believe that today they are going to raise rates, because essentially the market is still very healthy and strong, right? And they need to raise it to cause unemployment to go up, and they need to combat the fact that we're still potentially going to go into recession. And something that most experts are not going to dare say is that we are also running the risk of going into hyperinflation. And if anyone can go back into history and like go back into the I want to say around 1930s, around the Great Depression, like, that's not saying that that's the magnitude that we could potentially have, but that was a point in time where we had hyperinflation.
So, yeah, buddy, any thoughts, any comments by chance?
Yeah, no. I was talking with Caesar about that a little bit ago. Yeah, definitely the risk of going into hyperinflation is a scary thought, but I definitely do think we have to kind of take it into consideration that, I don't know, we gotta keep combating inflation. But you keep raising interest rate hikes, then okay, well now you want to buy a house. Well, I mean, about buying your house in Utah or whatnot. That was probably, I mean, I don't know how bad that was or anything, but interest rates are getting a little bit crazy. So I don't know. My main thing is just we really just gotta wait and see. We personally, as the people or whatnot, I don't know how much we can really do. Being 19 years old, to be honest, I get to vote. All right, I get to do any of that. All right, I don't really get into that political side, even though I should. Some of you guys are gonna hammer me for that, but yeah, man, I don't know. I really just think it's really a waiting game to see what they're gonna do. And if they're whatever move they're gonna make, whether we say so or not. I feel like, so I don't know. Just so the risk of hyperinflation, like Caesar said, it's definitely a scary thought for USA.
Yeah.
Caesar, do you like to look at the bond market often? Because I feel like recently the S&P 500, probably the biggest villain of this has been, you know, the bond market. You know, people have been watching bonds, and as the bonds and the yields have moved on up, that's what's been dropping the market the most. You know, the seeing that bonds are continuing to climb, and as high as they are in 2007, and we're seeing the 30-year yield over over 8% or whatever the number was, and that's as high as it was all the way, or 5%, excuse me. That's as high as it was all the way since 2007. You know, is that anything that you currently watch?
Yeah, I do look at the bond market and the treasury market and just seeing the flow, just following the flow of money and seeing like where majority of the money is going into. So what most people don't know is like, yeah, whenever the bond market goes up, the U.S. Stock market is going to head down. So I've been seeing a lot of money flowing into the bond market, and these are individuals that, you know, they have a leg up on us retail traders because they have the means to be able to get certain information before we do, right? And because of that, they're actually able to react faster to, you know, potential turn of events in the market before we can. We're going off of, you know, price action and stuff like that. So being able to monitor the bond market and seeing that, okay, there's been a high influx of money into it, even though like the bond market, it doesn't move as fast as, let's say, the SPY or NASDAQ, but it's more think of it as like a safety haven, right? So if we're gonna potentially go into, you know, a recession and they continue throwing out this soft recession, there's no soft recession. It's either recession or not, and it's like, yes, there's levels to it, but it's like a recession is a recession. It doesn't matter how soft it is, or how I mean, it could be a more extreme, but there is no such thing as a soft recession. And they say that to like kind of disarm people, like, oh, it's not going to be as bad. And then it's like, when you think it's not going to be as bad, it's like, that's when it is bad. And to follow up with what you said with CNBC is, people have to understand, the people on CNBC, they're getting paid to read a script, right? So even if they have a perception like, oh my God, this market is going to collapse, they can't say it because, one, they're under contract, they're employed, and they read off of a monitor that is telling them what to say, aside from the fact that they might, you know, throw in little comments here and there. But these people are being paid to say certain things. And this is where I say you want to pay attention to the charts, and you want to look at the higher time frames, because when you look at the, you know, the charting on whatever time frame, daily, 1 hour, weekly, that chart is telling you something, right? When you see price action, when you see consolidation, it's like, okay, well, something is happening here. And then if you go beyond the regular equities and you look at the bond market, which again, most people don't, because it is somewhat boring. It's like doing algebra, right? Nobody really wants to, you know, deal with all of that. So yeah, so definitely be on the lookout and watch the bonds, the bond market. Also, to add on is, be on the lookout for the next year or towards the end of next year, when the Feds and basically when they indicate that they're about to cut rates. Historically speaking, every time the Feds raise rates, the first time they say that they're going to cut rates, the market is going to drop 18 to 20% minimum, right? So that means if you have long-term portfolios and you're up, or you're close to a 52-week high, you might want to start thinking about downsizing and maybe cutting, taking some profits off, and maybe, you know, moving your stop loss, or maybe look to purchase some leap year puts to protect you on the downside.
Well, all great information, absolutely. And you're saying that when the Federal Reserve says that they cut rates,
Yep,
that we're going to see a drop?
yep,
Or
we're gonna
when we
see.
raise rates?
Yeah, no, when the first time that they say they're going to cut rates, the market is going to drop 18 to 20%. And after that, that's when you want to look to buy, right? So people think like, oh, the Feds are going to cut rates and the market's going to spike up. No, the minute that they say they're going to cut rates, the market is going to drop 18 to 20%. And then it'll rebound.
All right. Well, yeah, I mean, as I said, I don't expect us, cutting rates anytime soon. That's still something that's very, very far away to me. I'm just taking a look over on, these charts here. And, something I always say to traders and something that I always, talk out loud towards is the farther away the time frame, the stronger the chart is usually going to be. So, for instance, if I am looking at a 1 minute time frame, 1 minute time frame to me are not very strong. We see patterns that we say, oh, bull flag pattern, and it doesn't work out. We see, oh, hey, potential bounce play at the 50-day moving average, and it doesn't work out. The 1 minute time frame is usually the weakest. We could still look at it to get some great detail, but we usually want to take a step back. The 2 minute is a little bit stronger than the 5 minute. We can see some bounces that work on out. We can see some patterns that work on out. We can see the bounce at the 200-day moving average. Then we could go back towards the 5 minute, the 10 minute, so on and so forth, until you get back to the daily chart, which is what most people like to look at. But at every now and then, especially when we get to like these Federal Reserve meetings, I always like to kind of take a little bit of a larger step back and go all the way towards a weekly chart, go all the way back towards a monthly chart, some of the biggest, time frames I can have. And when I take a look at these, you guys can realize some pretty cool facts that happen. And what these cool facts are is, let's take a look at the 50-day moving average. The 50-day moving average over on the monthly chart has been touched in October 3rd of 2022, and we bounced off of it. Then we were touched back in the pandemic, and we had the monster climb. Then we were touched back in 2018, and we had this monster spike. And then we also touched it back in 2016 and had this monster spike. So let's say, for instance, if the market ever does go on some sort of large drop, let's say we do raise interest rates today unexpectedly, and over the next week and a half or so, we ever start falling and crashing. If I told you that every single time on the monthly chart, we hit the 50-day moving average over the past 7 years, we have bounced off of it, obviously that would be an amazing entry. Whenever you go back into larger time frames, it usually, again, is always going to be the best entries. They'll always show you where the best entries are. Same exact thing if I want to go over towards a weekly time frame. Weekly time frame shows us what? Well, we did get a bounce back in 2022, did get a bounce back in 2018. Almost it's the same exact thing that we saw on the monthly chart at the 50-day moving average, only this is at the 200-day moving average on the weekly chart. You can see during the pandemic, we got a little bit of a crack, but then went on that monster spike. But remember, traders, make sure you're in the right time frames when looking at these. So if you came to me right now and you said, Deck, where's a place that I can jump in on and I have a 99% chance of success? Not saying jump in on and you are going to win forever. But where would we get a bounce play? Well, I'll tell you right now, we have bounced at the 200-day moving average every time we have touched it over the past, again, 7 years on the weekly chart, right? That is, pretty significant. So yes, if we ever did have a surprise rate hike, and over the next few days, over the next few weeks, we fall all the way down $20 down towards, or $30 down towards $3.92, that would be an amazing dip buy. If we ever again switch over to the monthly chart, again, we start falling on down towards around $3.90, there's that amazing dip buy. So sometimes, again, I do want you guys to realize, and I always like to just take a look, whenever we have some sort of big news, or maybe we're crashing extremely hard, or something along those lines, that is where things do start getting a little bit tricky. That's where you definitely want to, get into a larger time frame and kind of take a look at some things. Also, I'm going to, let's just do this here for a second. Go to indicators, turn off your 50-day moving average, just leave your 13 EMA. 13 EMA, look how significant this looks, guys. It's pretty interesting when you guys break this on down. 13 EMA, notice that right here over on the monthly chart, all we're doing is bouncing off of it, bouncing off of it, bouncing off of it, bouncing off of it, little consolidation, bounce off of it, bounce off of it. And then we did have interest rates being raised in 2018. We did have the pandemic hit. And notice each time we cracked the 13 EMA, it led to a sharp sell-off. Here's a sharp sell-off, here's a sharp sell-off. And again, when we crack the 13 EMA right here on the a monthly chart, there's a sharp sell-off. Well, ladies and gentlemen, we are sitting right now, right next to that 13 EMA. There is a great chance that if we do not bounce off of this over the next few days, that we could start seeing, hey, what happens when we're underneath the 13 EMA? We start seeing these sharp sell-offs. And there might be a couple big months ahead of us that are leaning towards the red side. So remember, whenever you want to look at the most popular indicators, the 50-day moving average, the 200-day moving average, the 13 EMA. You definitely want to do them, of course, on daily charts, over on weekly charts, or over on monthly charts, and they are going to give you some of the best entries possible. Now, with that being stated, I just kind of want to open up the floor to, Buddy here and Caesar. Is there any kind of go-to indicator that you realize, hey, this works out well, this is kind of my go-to, I really enjoy this, I follow this a lot? Jaden, do you have anything like that?
Yeah, my go-to. So my go-tos for anything, and I like simplicity. I love keeping a simple chart. I don't use the 9 EMA and the 21 crossover with the Fibonacci retrace. I don't do all that. I just keep three. I keep like four indicators technically. So Kush is actually his auto support and resistance. I keep that there just in case. It plays out rather well. VWAP, 200 day and 50 day. Those are my main indicators. I might add a TTM squeeze, which just essentially says if we're bullish or bearish right this second. I don't use it a lot. It's just there. But I just go based off of, 50 day, 200, and the VWAP. That's really it. I keep them on all my charts across the board. And other than that, I mean, there's chart setups across the board. You can see with your own eyes, you can see support and resistance zones. You don't need an indicator for that, right? If you go back. So, yeah, that's really it. Just those main three, 50, 200, and VWAP.
Awesome. Yeah, that's basically where I'm at as well. Caesar, do you have anything special on your end that you're always watching, saying, hey, that when this thing hits, it always works out for me?
Yep. For me, it's the stochastic and RSI. So for me, I love watching the stochastic on a higher time frame because I like to scale into positions and scale out. So whenever I see the stochastic on a 1 hour or 4 hour time frame, I'll start scaling in. When it's oversold, I'll start scaling into longs. When it's overbought, I'll start scaling into shorts. And that for me has been it's been a game changer for me. So that and RSI are my main thing. On every chart that I have, I always keep the 200 and the 50 EMAs because those are industry standards. I know most people like to use the SMAs, but because I like the day trade and I like to be in and out, the exponential moving averages have worked wonders for me.
Awesome to hear. Yeah, I mean, RSIs, I feel like are definitely great, especially if you're looking for more of like swing trading type of moves. Looking at them on a daily chart, it does give you a great idea of what's overbought, what's oversold, and where you can get those discount prices. So
Yep.
I definitely like checking those on out as well. So basically, just I know we're kind of talking about what's going on with the Federal Reserve, and is anyone jumping in before 2 o'clock today, or are you guys saying, hey, the best thing to do is just wait, watch, see, like when's the point to pull the trigger for you? To me, there's part of me that I do think, and I know I'm going a little opposite of Caesar here. I do think that Jerome Powell may play it safe and say, hey, we're going to pause rates, and then they're just going to hold rates being paused longer than expected. We're not going to cut rates at all next year. So that's kind of what I'm thinking. He's going to pause rates, make people happy, but then we're just never going to cut them back on down. So I'm thinking that today people will be happy that we are going to pause rates. And then when Jerome Powell speaks, we usually see the market go on up no matter what he says. So there's part of me that either wants to jump in right at 2 o'clock to try to get that little pop on up, or even just maybe wait until 220, 225, and then try to get that little rally that when he speaks and when he's talking, that little confidence boost where traders say, hey, that's good. If that's $1 or $2, I can make my profit right there. And if that leads to a $200, $300, $400 profit, I'm okay with that. I don't need, something that's absolutely insane. $200, $300 off that little, Jerome Powell confidence speech. That's kind of where I'm leaning on, trying to make my money. What part of this afternoon are you guys thinking about, where you can make your money?
So for me, I was actually looking for a dip buy a little after the 9:30 because it looks like we're going to continue up. I missed it by a few points. And again, today I seen how the market is moving right now. It's slowly inching up. RSI is already in the overbought territory. Stochastic hasn't quite reached it yet. ES is currently up about 15 points on the day. If by 2 p.m. it's up 30-40 points on the day, I'm gonna start scaling in short, and I'm gonna look to add because this movement up is letting me know that they're positioning themselves into the market for that drop, right? So, and again, I could be wrong, but based on my on past experience, if the market is running up prior to high impact data, it ends up doing the reverse, the exact opposite once that data is released. Just like if the market was oversold, right, leading up to that Fed minute, that means we're going to spike. And right now, the market is heading towards overbought on the 1 hour time frame. So this is another thing that is just solidifying my thesis on it being a short later in the day.
Awesome. Yeah, buddy.
Yeah. So for me, I think my game plan is more or less so. I don't know. So I'm probably gonna straddle it, and I know a lot of people are against straddles, and it's like, well, it's a wild time, but I do definitely think we're gonna get a pop no matter what coming into this coming into it at least by the end of the day. But unless obviously we raise interest rate hikes, then we should see a little bit of decline. But it's more or less the fact that I don't care which way it moves with the straddle play. That way I'm making money both ways. It's gonna be on two different prop firms, so it's gonna be okay. Easy challenge pass, easy way to do it. With 90% off on Apex. Some of you prop firms know about that, prop firm traders. But if you're trading on your personal funded, I'm definitely gonna wait for some sort of bounce play. Like if we dip down, like I don't know, a few dollars or whatnot, I'm gonna look to buy like almost. So I call it almost a rubber band. I have like this strategy called like AMD. It's essentially accumulation, manipulation, distribution. So like let's say we're chopping, and we just spike down. Well, rubber band effect says 9 times out of 10, and it usually pays out 9 times out of 10. You usually reverse to the other way. Obviously, you're gonna buy the dip. That's what everyone does. So buying the dip, that's kind of the game plan here.
Awesome. Awesome. Well, hey guys, really what it comes on down to is it's just a waiting game at this point. So I wanted to, get you guys on here, kind of hear your thoughts and, see what you guys are thinking. But no, I definitely appreciate it. I know Caesar is live right now. Yeah, buddy, you going live today at any point, for this?
Yeah, I'm live right now. I just don't have my camera on. But I wanted to ask you, what are your thoughts, bro? What's your game plan, my man?
I mean, my game plan is obviously wait. I'm waiting until 2 o'clock, and 2 o'clock, I want to see what the results are. And as I said, I'm probably going to do a call contract. Right when Jerome Powell starts speaking. I don't want to take a risk of jumping in before 2 o'clock in case it ever did dump. There would go my account right there. That would be completely gone right away. But I would say I'm going to probably wait until 2:25 or so that I'm thinking about doing a call contract for, again, when Jerome Powell speaks. I know it's always risky to jump in before, again, someone says something, but at the same time, I mean, I've been doing this for so long, and I'm going to say this, guy, probably 95% of the time when Jerome Powell speaks, the market moves up. So yes, I am just kind of playing the odds in that manner, especially if it is pausing rates. I'm thinking, okay, pause rates, we have confidence. Then Jerome Powell speaks, brings more confidence. Usually when the market falls is after he speaks anyway, when he gets tripped up on questions. So it's not like the market falls when he's talking. Usually the market falls when he gets tripped up on questions afterwards. So if anything, I think we can ride it out from 225 all the way up to 245. Then when questions start, that's when you can take a little step back, take your profits, and say, okay, I'm good on the day. So that's kind of what I'm thinking at this moment.
Well, there we go. Yeah, and as me and Caesar are trade cash members. We do require 5% of all those small account wins. So thank you for that very much. Yep.
Absolutely. So yeah, if you guys want to go ahead and watch Yeah Buddy Trades, and you guys want to go watch Caesar, they are live. They are, again, futures trading right here. And Yeah Buddy Trades, all you guys got to do is click the lobbies page and be able to join them. They are live right now, so you guys can go ask them more questions, and you guys are all set, ready to go. But again, hey, guys, thank you for joining us this morning. I appreciate you.
Thank you.
Buddy, take care, Sean.
Later.
See you guys.
All right, ladies and gentlemen, just had a nice little pop on ES. Ooh, wow. Okay. That was the 10. Ooh, whoa. Okay. I am going to take a small market short. Oh, that was on NQ. Ooh, look. Y'all see that pop and short on ES? Okay, NQ.
Order filled.
Just added to my NQ short. My cost average is 14,560. Oh, excuse me. Okay. So this data release just caused a gap up on NQ, on ES. Now this is on the Forex side. So this is definitely another good sign, which means this gap will be filled. Give it some time.
Shares soaring double digits right now on the back of its earnings beat. Sales slipped, but margins improved. Generac is the best performing stock in the S&P this morning.
Let's see.
ISMs and jolts. Let's get back to Rick Santelli. Rick.
Yeah, some watch markets. They give you pretty good.
Let's go. Let's go. Come on. Give me that retracement.
Well, it was up 4/10.
There we go. Up. Was almost at break even. So yeah, so I'm gonna risk about 40 points on this.
553,000, better than expected. However,
Look at that.
last month had a big revision from 9,610,000 to under 9,500,000, which means that this is now the strongest number since May. It would have been just in line with last month, but the downgrade was so large. That's where the comp even moves further back. Now, here's where the weakness seems to be showing up. The ISMs, okay? If you look at 46.7 on the manufacturing, 46.7
Yeah.
is the weakest since July, and it is now the 12th sub 50 in a row.
All right,
If you
guys.
look at prices,
Give me a
May,
few minutes. I'll be back in about
45,
10
comes in at
minutes.
45.1.
raise interest
All
rates.
right, ladies and
We
gentlemen.
heard from Powell before the blackout period when they stopped talking. He was
There's
very
no way they're
balanced and
gonna
sort of
raise
measured
interest rates. Bullshit.
in the idea that they could do more because inflation is higher than target, but they're also watching these longer term yields. And I think that's going to be the big swing factor today. And just what he says, and I'm sure he's going to get a ton of questions on the move in yields, the backup in long term rates. And here's a good chart about what's happened this year with the 10 and the 30-year bond yields and how much they've risen and why that affects consumers. I mean, this is the move, right? We moved up through the 2022, which is when we got the bulk of the interest rate hikes.
All right, we
and
are
continue
up.
to move up basically through now. We're not too
We
far
are
from the
up
high.
20
We reached
points,
that
almost
5%
30
level
points
the
on
10-year
that
not too long ago.
NQ
So how
short.
much do they think
I'm
that
gonna
is
move
going
my
to
stop
curtail
loss
the
to
economy,
break
do their work
even,
for
and
them,
I'm gonna
act as
close
an interest
one
rate hike,
contract.
whether it's a 25 or 50 basis points. Where are credit card loans in the 20% range? Mortgage rates at 8%. I mean, this starts to take a bite.
All right, so I've closed out one contract
They
on
don't know.
NQ for a little
We'll be
over
interested to
20
see how they talk
points.
about
My
it. So the more
stop
they
loss
talk
is
about
now
that,
at break
that's
even,
the
which
more
is
dovish it is, the more the market will be convinced that they're gonna
14,560.
Yeah. There's a cohort
All right.
market that says there's the eco data
Let's
and there's the
get
corporate
it.
commentary. And
Let's
the corporate commentary,
get it.
I know you've pulled sound from Estee Lauder, from Canada Goose, from Yum China, that would argue that yields do need to be lower than they are.
Yeah, we pulled some quotes, and part of that story really has to do with China. I mean, here's the Estee Lauder. Encouragingly, we returned to growth in the U.S. That was good news,
Wait,
with fragrance, makeup, and
8K,
skincare all
not too
contributing.
shabby.
The performance partially offset the pressures of Asia, travel
Mm-hmm.
retail, and a slower recovery of overall prestige beauty in mainland China. So China is the culprit there. Yum China CFO on the call. Since late September, we have observed softening demand.
I'm scaling into ES shorts now at 42.27.
Also. And here's Canada Goose, more of a global. They mentioned geopolitics.
Stop loss is going to be 42.30. I'm only going to risk about 3 points on ES.
And geopolitical environments that have impacted
Let's
consumer
go.
decision
Come on,
making
baby.
and prioritization of spend. As a result, we saw early momentum gathered in our second
Thank you, thank you.
2024 begin to slow noticeably.
Come on.
Although China's important.
It's like, yep, keep buying this up, bruh. If we get this nice drop later today,
Meantime, the flood of Q3 earnings continues. Almost 80% now of
There we
S&P
go.
companies are beating expectations. It does look, though, like
Come
Q4
on.
earnings.
I want 42.20s. I want 42.20s on ES.
It's a good example.
Can I get that?
It's not Q3, it's Q4. It's the outlook. And as Sarah was talking about, I am hearing
Come
a
on.
lot more
There we
cautious
go.
comments than I've heard in a long time. Let me just show you some numbers that came out today.
Keep it going.
Vermont came out. They cut their full year sales guidance. Ongoing volume headwinds. I don't know what's going on with Humana. They had a nice beat.
I'm
but they
tempted to
affirmed
close
their
this
full
other
year guidance.
position
No
on
raise the full year guidance when they had a nice beat. Same with
NQ.
CVS. They also affirmed their full year outlook. They had an 8-cent beat, no raise there. So that's essentially being very cautious. And been talking about Estee Lauder for a while now. Those are China weakness. That stock's been a mess for a long time. But look where we are right now. So we're almost 3
There you go. Oh my God. If this thing can get over under 500 even, I might not need to trade later today.
60% of the companies have
Come
had
on, baby.
estimate cuts that have reported. That is a
Come on.
very, very high number, and the average cut is about 2.2%. You typically get a little bit lower as you go on into the first month of the quarter, but it's usually around 1%.
Do
This is
not
more than
play
twice
with
the
me.
normal, and 60% is a very high number to have estimates cut. Just look at some sectors here. I see 60 companies in the S&P, 10% or more cuts in their estimates for the fourth quarter. Look at some of the airlines here. American, Norwegian reported today. Alaska.
Took profits.
They're enormous. This is
All
only
out
since
of
September
NQ.
1st.
I only have
Typically,
ES shorts right
these are
now.
pretty high. The good news is the market's very efficient in sniffing this out. Look at Norwegian's chart here. Norwegian was 116 just as the Israeli Hamas war started. Look, that goes to 13. The market very efficiently sniffed out the problems that were had.
No
by
problem.
Norwegian's
No
numbers
problem. Quick
were
little
worse
trade.
than the company
So
than
the
expectations.
reason why I'm closing out the trade on NASDAQ is it's not really following through right now. I'm just not liking this back and forth, and before I can get stopped out at break even, I'd rather just close out the trade, lock in the profits, and then look to re-enter after if it does end up giving a good entry.
Is the market really efficient?
Let's
It's not
go.
perfectly
Good stuff.
efficient,
Good
but
stuff.
it smelled very, very quickly that there was an earnings problem here, and very quickly started adjusting prices on this, even before the analysts started moving. The analysts only started moving 1-2 weeks ago. Those stocks were already dropping. So I'm always in the camp. The markets are not perfectly efficient, but they're remarkably good at snipping things out before the analysts even started doing things.
Bob, you know, I know you like to focus on the industrials, for example. I don't know if Eaton shares are having kind of a nice morning. Not sure if that's a tell at all, but I'm curious as to your thoughts.
Eaton has actually been almost an AI play this year because it's essentially involved in industrial automation, power management supply, and that can be very efficiently managed using AI. They're very involved in that. So believe it or not, this is an AI overlay to it. And it's been there for most of the year. That's very interesting. That's one of the big plays that are out there. But I love Eaton because they're one of those companies that help manage all the stuff behind the walls. You know, all flow systems and heating and ventilation, air conditioning system, anything that's involved in managing the buildings around the world.
Don't mind me while I
have a
eat.
very good sense of that right now.
Bob, it's also a big day for another reason here. I don't know if our viewers know, but I want to welcome you to the
Might get
30-year
stopped out
club at CNBC.
and stop his hit.
Speaking of love, we have nothing but love.
Stopped
for
out of
you,
ES.
as you do for Eaton, apparently. But now, I
We'll
know
look
you've
to
been here longer than
re-enter.
30 years, so it's confusing to me. It's officially 30 years, but you were the real estate reporter when I walked in to
Oh my
Fort Lee
gosh,
30
look at
years
this.
ago.
Look at that.
There
Yeah.
you are on the street reporting.
Who is
not
that?
real estate.
And that's
You in Florida?
that's brown hair. Yeah, that was the days when I had brown hair. Originally, it's 33 years. A lot of us were here for several years before we became official staff. We were full-time people working here, but before we became official staff. So it's been 33 years. And you're right. NBC has a beautiful policy of inviting people to 30 Rock and to out
So
to
if you
dinner
guys have any
25
questions for the time
years or
being,
more. You've been here
feel free to
30,
ask.
Here more than 30, so we had a very nice little get together.
I will be ooh, look at this. This is lovely.
Different styles of clothing here.
Oh, I was gonna say that's.
Oh, I need to document this. Hold on a second.
This is what you call a monochromatic. And at that
So yeah, so if
time,
you guys have any questions, feel free to ask.
Double-breasted?
in the early double-breasted in the early 1990s.
Since-
You can actually see the whole evolution. Striped shirts became very big. This is the late 90s right now. And so
When did pocket squares enter the picture?
I've always done pocket squares, and I don't know why. It sort of came in and out. Some of those ties are really great. A couple of them look like somebody threw a pizza at me a couple times. But really bright ties were very big up until about the dot-com bust.
Yeah.
That's about the time things kind of turned around.
And obviously, you got out of real estate and into markets. Bob, I cannot imagine my 30 years, how much they would have been diminished had you not been my colleague for all this time. You
Thank you.
are so beloved by so many here. Probably number one on everybody's list. You make every day better just by being
I
here.
appreciate
So
it.
thank
I elected to stay with this company 20 years ago because CNBC is a congenial place to work. It's a great company. It's got great management. We're here on the floor of the New York
Yeah,
Stock
so now at this point, it's literally going to be a matter of just waiting. As you guys can see, RSI's reached oversold, overbought territory. Stochastic is finally there. It could go a little bit more, but this is looking, again, this is looking really, really good for later this afternoon. I'm loving this run up. I'm sad that I missed it. I had a buy limit at 42.13, but damn, I probably should have just taken it at the 16, but I was busy answering Dex questions.
be a part of the NYSE. But more important, we're lucky to be a part of CNBC.
Wow.
We're lucky to be with you, Bob. Congrats on
you.
33
marvelous.
years, 30 years officially.
Who's counting at this point?
Never looked better. Never looked better, Bob.
Thanks, David.
All right, let's get back to some of the moves in the market this morning. AMD shares, you may have seen them swinging positive. This, after what was an initial fall last night, the guidance didn't look particularly good. Let's get over to Christina Pratsanevelis. find out what changed things here, Christina.
Actually, not to get investors excited and overlook the modest Q3.
Currently eating my post-workout meal.
Like you pointed out, David, the stock initially fell when earnings came out, but completely reversed course and is now positive today when Lisa Su said.
At this point, I'm looking for possibly another push to short.
$2 billion, and that number is higher than most street estimates.
Market is up 20 points so far. And again, RSI stochastic is pushing up to overbought territory. If I take a look at the 4-hour, stochastic is already overbought. RSI is also overbought. So we might get one more push before the drop. And once we start dropping on ES, I will be targeting 41.38. All right, so right now from where it currently is to where it needs to go, that's going to be almost 100 point to the downside. Now we may not necessarily hit it all today. I mean, technically we could, because we could drop the 20 points and then drop another 50 or 60 points to the downside. So yeah, it's just going to be an interesting afternoon. So quick nice little trade on NASDAQ. Glad took profits. I'm tempted to possibly reshort NASDAQ again, but I'm just going to wait maybe till the London close and then see what type of opportunities we can get.
Almost 5%. Thank you, Christina Partsinevelos. We continue to monitor the Israel-Hamas war now in its 26th day of conflict. Let's get to NBC's Jay Gray live for us.
Yes.
In Tel Aviv.
So again, if you look at ES, so right here, look, I'm on my screen. I'm gonna maximize it. All right, 1 hour time frame. The Sunday open was a gap up. All right. Last Friday, ES closed at 41.36. Now I'm going to be targeting 41.38, which is the top, which is basically the top of the red candle where it opened. The close of the red candle of that 1 hour red candle was at 41.36. So I always like to exit out a few points before the overall target, just to ensure that I do get taken out. So yeah, so on the drop, I will be targeting that level. And if we look at NASDAQ as well has a gap down at that level too. All right, well, not at that level too, but NASDAQ has a gap to fill at 14,269. All right, so if once NASDAQ starts breaking down, we can expect that to be filled. Dow Jones as well. Dow Jones, although the Dow Jones one is a little smaller, but let's say the Dow Jones should be dropping back down to 32,508.
As well as just off the coast by the Israeli Navy. More than 300 targets, we are told, were hit overnight into the day today. And we know that, at least according to the IDF, one of the
NASDAQ with the push.
October 7th attack was apparently killed during those strikes. Now, Hamas is disputing that. The IDF saying that they got one of those leaders. Hamas says that is not the case. We also know that the IDF has acknowledged hitting one of the largest refugee encampments in Gaza. Dozens killed there, and that's something that the world continues to watch unfold and to learn how and why this refugee camp was caught up in the airstrikes from the IDF. We have also been told that the IDF is reporting its loss of soldiers on the ground, and it's at least 11 soldiers between the ages of 19 and 24. And sharing his condolences with the families today, Israel's Prime Minister Benjamin Netanyahu saying, and I'm quoting here, "They have fallen in the most just of wars, the war for our home."
No update, Jay, on the hostages at this point?
Not heard anything other than negotiations continue, but they are very very tense because of the continuing advancement of IDF troops.
Jay Gray in Tel Aviv, thank you very much. As we head to break, here's our roadmap for the rest of the hour. Markets kicking off November in the green, usually one of the best months for stocks. More on how to position your portfolio from here.
Plus, shares of Caesars Entertainment are up on what seems to be strong consumer demand. What that may be signaling about some of the other gaming company stocks.
And the semis playbook with one analyst who says he's not worried about slowing demand. The stocks, he says, are a buy right now as Squawk on the Street continues.
Still pushing. Woo. Y'all see this? Ooh, it's setting up. My oh my. Ah man, I've been very strong push, yes. Right now, ES is up 30 points on a day, so another 10 to 20 points movement and should be the top. Savage. Oof. Do you think we will top up? Yeah, I think so. So like this last push right here, we're getting closer to the London market close. So we're having another solid push. I do think by 1:30, just before 2 p.m., we will have topped out. Excuse me. So now it's literally just a matter of just waiting. Like, and again, the more they run it up, the better, because again, it just brings more confirmation to my analysis as far as this run up to then short later in the afternoon when the feds come out. I almost want to be like, yo, who wants to put some money on that the feds are gonna raise rates or not raise rates? Yeah, I'll be jumping off at 11, but I'll hop back on. I'll start streaming again at 1:30. So 30 minutes prior to the FMOC minutes, I will start streaming again, just so you know we can catch this movement. Yeah, and I already hit the gym this morning, so I went early morning. I'm here. I was a little bit late. Didn't actually make it there for like 6:30, like yesterday. But yeah, I've been hitting the gym early morning so that way I don't have to miss the afternoon session.
We've talked to Dubrovko, we've talked to Marco about the peak impact of these rate hikes still to come and what that means for corporate demand, corporate pricing, the consumer. Does that mean equities have some tough roads to hoe?
We do think that we're not in the soft landing narrative at JP Morgan. We still think that recession is a risk here, and that the longer that you see central banks remaining on hold while signaling with their buys to hike, you can have a deeper recession that just takes longer to materialize. So we remain defensive over here. I mean, we still think that energy is going to do well here because of some of this heightened geopolitical risk, but we're recommending more sort of one proxies like utilities, looking at staples. But I think the key risk we're seeing is that the high yields are here for longer, and we really don't know what this means over the longer term. I mean, we had a real yield target of 2.5% that we did not think that we would hit this year. But I think there is a risk of overshooting, and there's some underappreciated risk here. Like, I don't think there's enough attention paid to quantitative tightening.
What about the geopolitical risks and if enough attention is paid on this? It feels like a tough one to get your arms around, not whether it's bullish or bearish for stocks or oil, but just the implications it could have on flows around different countries, the fiscal implications on the U.S. government, what that might mean for bonds, the dollar, oil. It feels like it changes a lot of things, but it's hard to see near term what that necessarily means for markets.
I think you're absolutely right. The problem is with the geopolitical risk. There's
All right, buddy. Yeah, see you this
what
afternoon.
we're seeing in the Middle East for some of the U.S.-China dynamics, or what we're seeing with Russia, Ukraine, and that means that you've had a flight to safety. So you can see the stronger dollar remaining here, higher for longer, which is harder for longer for a lot of the emerging markets countries. And what we're really seeing is that it's crowding out some of the flows to other places. So we've seen big outflows from emerging markets, even as a lot of the macro data has actually held in pretty well for a lot of the bigger emerging markets countries, including China's stimulus. We still see the outflows because there is a flight to safety here.
Yeah, 10-year closing in on 4.
Yes, I'll be back on at 1:30 at 1:30 p.m. I will be back on streaming to catch the 2 p.m. Fed minutes.
Morning led by Generac, as you can see. Advanced Micro just fell off there, but we've been monitoring. There it is again. The significant rise in that stock after it's been down after hours. We've got a lot more to talk about this morning, including Caesar shares, which are higher. We'll tell you why. Don't go anywhere.
I'm gonna be jumping off in 30 minutes, and then I'll jump back on at 1:30. Yo, what it do? Bro, who you telling, man? I was a little late to the party. I try to catch like a dip buy on ES. I had a buy limit at 42.13, but the damn thing only came down to like 42.16, and this has been a massive rip. Massive, but all good. But this right here is it's letting me, it's confirming my thesis that the market's gonna drop this afternoon, because it's like it's not even 11 o'clock and the market was already up like 30 points, and we still have that gap up from Sunday, which I believe will will get filled possibly by the end of the week. But yeah, but as of now, it's looking good, because run up before the Fed minutes, bring the market to overbought territory on the 1 hour and 4 hour time frame, and then just whoop, reverse the whole thing. Yeah. How about you? How you do this morning so far? Mm-hmm. Mm-hmm. It's like, nah, homie. Mm-hmm. Mm-hmm. Yeah, yeah. No, I mean that until like slightly before the end of the day, and then you had that massive run up yesterday towards the close. Mm-hmm. Facts. Oh, I've been. Yeah, I've been. She got back on my list. Nat Gas. Like I've been watching her and stuff. And honestly, like I was going to take the long yesterday, but I was preoccupied. And then last night I was looking to take the short, but I was actually I was long on the Nikkei. Yeah, so I caught a nice like 250 point movement on the Nikkei. And then yeah, I ended up calling it a night, bro. Actually, my TP actually hit while I was sleeping. So I woke up, I was like, oh, my position closed out. I was like, great, and it ended up running. It ended up running like an extra like almost 200 points, because I got long at, I think it was like 30. It was like 31 350, and it ran all the way to 31 700. So yeah, so I woke up to TP being hit, but yeah, but Nat Gas was definitely looking good. Yesterday for a long, and then last night for a short, but missed that. But all good in the neighborhood. Now just here waiting for this pullback later today. But yeah, but a week, like taking some time off, like it definitely does you good, because I like me being off the charts for some time, and then I come back, but like I literally come back like I never left, and just be start smoking it. Look at this rip. Okay, so Nasdaq could still run a bit more. 32 points and counting on ES.
Here's your CNBC News update. The Trump family is center stage this week in the former president's $250 million fraud trial. Trump's sons, Donald Trump Jr. and Eric Trump, are scheduled to testify over the next 2 days. The former president and his daughter Ivanka
Damn,
are
they
expected
still
to
coming
take
for my
the stand
man.
next week.
Leave my man Trump alone.
Trump and his children of being aware of and knowingly participating in a long-running scheme to inflate the Trump organization's assets. Everyone in the Trump family has denied wrongdoing. The U.S. infant mortality rate rose last year for the first time in 2 decades. According to a new CDC report, the rate of children dying before their first birthdays went up 3% to nearly 6 infant deaths per 1,000 live births. Birth defects were the leading cause of the deaths, followed by preterm births. And 2 NASA astronauts suited up today for their first ever spacewalk. They're currently working on maintenance upgrades at the International Space Station. The work is expected to take 6.5 hours, guys. Pretty cool.
Silvana, thanks. Just a few hours away, meantime, from another decision on interest rates and a presser from Federal Reserve Chairman Jerome Powell. Our Steve Leisman joins us with what to expect this afternoon. Hey, Steve.
Yeah, Carl, I want to start off with what's going on in the stock market right now.
Mm-hmm.
The 10-year yield falling pretty sharply as it's taking 2
Yep.
steps down. One in response to better than expected Treasury announcement refunding. Another in response to that weaker economic data, especially the weak ISM was out at the top of this hour. Here's how the 10-year looks right now. You can see that first leg down came at 830, and then it kind of bounced back up, presumably declined, and then it now 78, which Rick Santelli says is an important benchmark level, followed by market.
Yep.
Been down this level since mid-October. Treasury saying it launched $120 billion of securities, that's below expectations. $102 million is raising.
Facts.
9.8 million is new cash. We'll continue gradually increasing coupon option sizes for at least one more quarter in all tenors. But the key here is the market liked the idea that the Treasury saying that the bulk of this is going to be towards the 2 to 5 year end rather than the 7 to 30 year end. That's the thing that the market liked best, and why there was a bit of a rally, which stocks, by the way, that weaker data here.
Mm-hmm.
That probabilities going into the meeting. You're at 0 for this meeting. This is 0, 21% for December, and 28% for January, which raises a major question for the Fed chair, whether he's happy with the market, all but pricing out the possibility of a rate hike here. He might use the press conference to inject a bit of hawkishness as he's concerned the market is pricing out hikes and or pricing in cuts more quickly than the Fed wants. Sarah, I think he's okay if we end up having bond yields falling on weaker data. I don't think it wants bond yields to respond or fall.
Yeah.
All right, Steve, thank you. Steve Leisman with the setup. Joining us now to discuss is former Richmond Fed President Jeffrey Lacker. It's good to see you, Jeff. So, do you expect Chair Powell to lean one way or the other? I mean, he could go hawkish because inflation is still above target, but then we've also seen this big backup in long-term rates.
Yeah, there's nothing in it for him to take interest rate hikes off the table. Signal that the
Yeah, when those chop sessions hit, man, it's just better to just sideline and wait, because if you avoid those choppiness, like then you end up having, you know, a day like yesterday and a day like today where like literally just one direction, just solid move. Yeah. So for me, like usually when there's a chop fest, like I'll take what I can get, 1-2 trades, and then call it, like, and I'm literally done by 11. Okay, we are still hovering,
A tiny fraction of the workforce, maybe under 1/10%. That's a
Yeah.
bigger, stronger wage.
Dow Jones is at the second IZ.
Unionized areas or other areas, that's a concern for wages. So they're far from getting it under control. Recession risks have definitely receded in the last 6 to 10, 12 months. They're not totally gone, but they've receded. And compared to past recoveries, they are 2 to 4% behind where the real rate typically gets in the recoveries in which the Fed has been able to contain inflation from the 80s through the 2000s. So in that setting, pausing is a bit perplexing, and it would seem to be a signal of elevation of the employment mandate over their stability.
So if you were at the table, it sounds like you'd be leaning toward more hikes, and that's the case that you would be making. On the flip side, though, Jeff, you can make the case that the wage acceleration has stalled out and is coming down. I know the ECI number was a little bit firmer yesterday, but it's still in a
Where?
downtrend.
What do you? Oh, on the drop.
And you see that in most of the
I said you in from the highs.
sticky. They've come down very far, and at the same time, we have this big rise in rates at the long end, which is going to hurt the economy and the consumer.
Okay.
Maybe we haven't felt it yet, but it's going to happen.
Yeah, it'll. No. You know. Yeah, you know why? It's because X, Twitter, whatever, their finances is not that good. So they're thinking that, he's gonna have to sell to, sustain that. Yeah. Because at like I'm right now I'm looking at the 1 hour time frame, and I had two levels marked off. I had the highs being 220, and then the lows being 202.68. And it was like, yo, if this thing broke below 202.68, we would end up going lower. And if this thing remains to stay under that, dude, I want to say I have a target back down to like 150, maybe 100 even. But let me see. Daily doesn't look too bad. Let me go to the weekly. Weekly we've bounced, and if this can close above 196, we're good. Place of interest where I would potentially look is 152 area. So the 152 area would be a place of interest. Yeah, but long term, like Tesla is one of the best plays, for the whole EV sector long term. So.
Jeff Lacker with the Hawkish Case, thank you very much for joining us.
Thanks. Coming up next, AMD's up on the back of its latest earnings and outlook. Stocks up more than 50% this year. Our next guest says there are more double-digit gains to be had. We'll talk about why and what other stocks you might want to look at when Squawk of the Street comes back. Dow's up 200.
Oh yeah. So mark off. Yeah, weekly. Yeah, we could definitely see a retracement back down to 152, but I'll wait to see how things end this week. Let's take a look at the monthly. Yeah. Ooh. 35 points on ES so far. Ooh, ooh, ooh. Oh, here we go. Come on, bro. Getting closer. Oh, beautiful. Oh, was that the last pop? Oh, go on, baby girl. Go on. Do your thing. Yes. Yes. Oh.
About their ability to compete here against NVIDIA and generally in this market for AI chips.
I think AMD is trying to execute well. I mean, they're talking about 2 billion in AI sales for 2024 from about 400 million this year. So pretty nice ramp as you see that AI.
It's looking good. It's looking good.
But also we have a December 6th event coming up. So the next generation products on the AI side.
It is looking good.
What's AMD's sales pitch when it comes to AI? Why them and not NVIDIA, for example?
There we go.
Yeah, I mean, obviously NVIDIA has a really high performance product. It's a pretty premium product.
Keep it going, baby.
AMD is coming in with a much better memory on the pricing side. They also have a lower, I would say, more attractive price point, which gives flexibility because if you're a hyperscale OEM, you definitely want to have a couple of sources on your AI hardware platform. You don't want to be sole source to one, one OEM. So that obviously is a huge advantage for AMD in a market that's so tightly, has such a tight supply, has such a huge demand. So I think that will be a tailwind for them in 2024 and into looking out into 25, 26.
Well, a lot of these stocks are trading as AI stories. I mean, there's still issues with the end markets. What did we learn about PCs and gaming and demand in general for the bulk of the revenues where it is right now?
Yeah, I mean, for sure, gaming and even the 5G comm side was weak, and that's what was soft in the guide for December. But, PCs and data center are showing some signs of stabilizing and starting to improve. PCs for them was up almost 46% sequentially. They did much better than Intel. Intel was up only 16%.
Create a couple of
sequentially. And the data
alerts.
center side too, I think when we look at the sequential numbers, up a nice 20-21% sequentially
Below.
versus Intel still had some challenges in the quarter. But that said, both PC and data space start to be coming around.
Just got short NQ.
For all these compute guys, AMD, Intel, etc. So,
Vijay, thanks. Got it. Thanks for the update this morning. Obviously, AMD shares doing quite well. Should point out Nvidia, which was not on that chart, also up over 2%. We do have some developing news on the trial of Sam Bankman-Fried. That'll be right after this break.
Yeah, I think once London closes, we'll see a further retracement. Come on, ES, I need you to break below 240. 4240. Come on, baby. There we go. Come on. Keep it going.
Closing arguments underway at the SBF trial. Let's get to our Kate Rooney, who is outside the courthouse. Hey, Kate.
Hey, Carl, good morning. So
Just don't want to do it.
started with prosecution. The assistant U.S. attorney kicked things off. He's trying to simplify what happened at FTX, saying it was a, quote, pyramid of deceit that was built by the defendant that eventually collapsed. He said a year ago, thousands of people tried to withdraw their funds from FTX, but that billions of dollars were just gone. He then asked who is responsible. He stepped out from behind the podium in this dramatic moment. He pointed directly at Bankman-Fried and said, this man, Samuel Bankman-Fried. He then transitioned into what he said were just the straightforward facts that are not in dispute. He says customers believe their deposits were theirs, not to be used by anybody else. Went on to say FTX ads continually said that FTX was the safest, easiest way to buy cryptocurrency. $10 billion was missing as well. He said what is in dispute is whether the defendant knew that taking the money was wrong. The government attorney said the answer is clear. He said, quote, he thought he could talk his way out of it. He then told the jury
sure
the
did.
defendant has lied to them. He said he was
Only
smooth
3
during some of
hours
the
until
direct
Fed
questioning from
rate
his own
hike.
attorneys, and then he was a quote different person during questioning by the prosecution. He reminded
Oh, I
them that
can't
Bankman-Fried
wait, bro.
said,
I can't wait till I hear him say they are raising it another 25 basis points. Hell, a 50 basis points would be welcomed.
Know what was going on at his crypto company, saying, to believe this story, you'd have to ignore the evidence. You'd have to believe that the defendant who graduated from MIT,
People probably
who
think
built
there's something
2
wrong with me wanting that.
multi-billion-dollar companies, was actually clueless. Still going on
Give me
inside.
that
We'll bring you
drop.
any updates as we get them, guys.
Kate, always important to remember. All it takes is one juror, I guess, who refuses to convict.
Huh?
To be the possibility of a mistrial.
Yeah, oh, bro, 100%. It's like, yo, why would you want that? It's like, bro, like, I want this drop, like,
Yeah, so as soon as tomorrow, David, they're going to finish up closing arguments,
yeah, it's
get
all right.
through some of the procedural jury things at the end of the day, and kind of read through the case, and then it could go to a jury tomorrow. It's still up in the air if court is meeting on Friday. Could continue into next week, but if the jury decides all of this quickly, we could get a verdict by the end of tomorrow. But as you said, David, it just takes one jury to have that reasonable doubt, and you could end up with a hung jury or eventually a retrial, but we'll see.
And so if they convict, then who decides on the penalties? The judge who says how many years?
The judge. Yeah, so the judge has discretion, I'm told, and also the fact that he did testify could play into some of the sentencing. If the judge determines that he thinks he lied under oath, that could actually add years to his sentence.
Yeah.
Kate, thanks for your great coverage. Kate Rooney at the
Word up.
courthouse not far from where we are at the New York Stock Exchange. Speaking of which, let's walk on the street. We'll be right back from the New York Stock Exchange.
Word? $7 billion a month? Jeez. Bro, it makes you think, like, where the hell's all this money coming from? We probably have more, but like as far as physical money, we have about like 1.5 trillion in like actual like physical money, but we have like 80 trillion in, in just air money. Like you have nah, never ever, bro. They're sitting on more money, like they're sitting on trillions of dollars, like that they can actually like put to work. Like, yeah, Apple ain't never going under. Look at their stock price, right? Like it amazes me that like with a lot of the negative news that they've had as far as like production and slow of this, slow of that. It's like, yo, you barely saw any movement. It was even downgraded, bro. Apple was even downgraded, and you saw like nothing. Like it didn't really react like other companies. Like some companies they get a downgrade. They have a bunch of negative news. Yo, you see the damn thing drop 15, almost 20%. None of the sort with Apple. I was just like, yo, like, wasn't there negative news? Wasn't there this? Wasn't there that? I was like, why is this thing still up there? They have so much cash flow, bro. It ain't even a thing. Shit. What'd you say? 167 billion? Bruh. Yeah. Nope. Nope. Hmm?
Good Wednesday morning. Welcome to another hour of Squawk on the Street. I'm Sarah Eisen with Carl Quintanilla, live from Post 9 of the New York Stock Exchange. With us today, Deutsche Bank's Chief U.S. Equity and Global Strategist on what to expect from the Fed this afternoon, plus implications from the Treasury's refunding announcement today.
Been a tough few months for the solar business, as you know, but First Solar was higher after results. CEO's going to join us in an exclusive later this hour.
And finally, the $1.8 billion settlement shaking up the real estate sector. The big changes that could be coming when buying a home.
First, though, a check on the markets. Some suspicions of a squeeze last couple of days. That remains in place apparently at the moment. Dow's up almost 200. 10-year circling back close
Oh.
to 4 3/4. The 2-year
Oh, I
low
got it quite a bit. I got like in the last month or so, when it was down in the 20s, I picked up some, not like a full one, but I have like at least like 5K worth of Bitcoin. So definitely holding that for the run up back up to like 35, 40.
10-year treasury yields coming down below 4.8. That's a level I've been talking about for a week and a half that has acted as a floor. So, we sort of clinched up in advance of this treasury funding announcement. You have some release of that tension. The volatility index is a nice spike on the chart. I still think while we've broken this very short-term downtrend, just on a technical basis, you still probably need another 1%